Good morning. It is Sunday, July 30th, 2023. Yes, tomorrow is the last day of July. Wow, we are past the halfway point. The years go by so fast, right? So fast. All right, let me go on YouTube to make sure everything is up and running properly. It should. Okay, let's see. Everything is looking good. It's always a step that I have to double check. Hopefully the stream will go smoothly. Sometimes it doesn't, and I don't know why. My internet is spotty at best, okay, unfortunately. Seems like there's always some kind of maintenance going on Sunday. But it's up and running properly. Everything is on the right size on the screen. Oops, see, this is why I had to do this. Let me resize the screen. I never understand why Thinkorswim or OBS, I think it's more of a Thinkorswim issue, but they monkey around with the sizing of my thing. Don't understand that part. Okay, now it's good. Alrighty, first up TLT. We are in a tight trading range. Nothing new here. I sold, I believe, a handful of 98, 95 put spread because we are at the red flow. Okay, to me, the risk reward is definitely selling puts down here, and then of course selling cover calls, as I have been mentioned many times. On any pop that you see like this, on this move like this, go ahead and sell 103 cover calls. I've been selling 103 on an extreme move like this. I sold 104, 105. Okay, so that has not changed. There is no sure, was it an easy trade to do? I think so, but let me do something here. Let me show you where. Okay, sometimes it's not cooperating to draw. Why can I do this? I don't understand sometimes why it's an issue. Okay, you can draw that. Could that be a new channel? Let's see. Let's duplicate that and see what happens. That's not what I wanted. Duplicate, yeah. And then draw. Interesting. Okay. Look like we have a new channel to contend with, right? Let's change the color so that it's easier to see. Go back to the good old purple. There you go. There you go. All right, so there's two channels, but I think we could be in a different channel this time. Regardless, I still think 98 is the red flow down here. I think is right here too. See right here. Let me draw in a line right there so that we can see it clearly. There you go. 98-ish. There you go. Okay, so yikes, that looks so busy, but it is what it is. Okay, so for now, there's no reason to be bullish on TLT. Sure, I was more bullish on TLT going back, 4 months, 6 months ago, but now that the econ data is not weak enough to signal a recession this year, then we're just gonna have to grind it out down here, collect the 2 or 3% interest. Right now, at around 100, there is not much downside. Okay, it's not much. We just had to weather the storm for another 6 months. It is what it is. Dow Jones, goodness gracious. Okay, I say it's time to go. I've been saying this for a while on the Dow, right? If you had the Dow, it's time to go. SPY, the risk reward is to be long here. Okay, to me, should there be a correction down to the 20 MA? Yeah, if you want to buy, just wait. Okay, wait until set a signal for yourself to go and buy the dip if you want to buy the SPY down there. But right now, I don't think the reward is going in, FOMO in, any of that. Okay, the Nasdaq, QQQ, that also has not touched the 20. Well, it almost did. Okay, it looked like it was going to, and then it popped. I still think the path of least resistance is lower. Keep in mind, earnings season is past the halfway point. I think we at the not quite at the 2/3 range for the earning, but we past the halfway point earnings. So catalyst to move higher still. Yes, you still have Apple, you still have Amazon, right? That's coming this week, I believe. So just be careful. Be careful. Let's take a look at sector by sector. First up, let's take a look at the defensive sector. Coke. I was trimming. Yes, I trim. Yes. Would I trim more? Yeah. If I see anything, up here, right, I'm trimming. Okay, I set an alert there, but for me, it was easy decision to buy 59 and lower. Yeah. And it's easy to start trimming at 62, 63. Okay, so it's easy to do that. Pepsi, same thing here. I talk about, if you want to buy the dip, the 100 MA with the spot, right? And then of course, when you get into the resistance, it's time to trim. Same thing. If you get anywhere near 192, you gotta trim. Okay, you gotta trim. Mondelez had the best move, I think. For those that buy into Mondelez here, after it touched the 100 MA for the first time in 5 months, 6 months, yeah, winning. But if you have it, yes, you should trim up there, 76, 77, in that range, right? Is a trim. McDonald's. Yeah, I don't have any McDonald's, and I have no desire to be a McDonald's at this point. Okay, so to me, it does not look like there is much. No doubt, if it can break this resistance, then we have much higher to go, right? New high, right? But to me, this look very iffy. This look like, a tough resistance for the past 3+ months, right? So, it's just not much there. Procter Gamble, same thing. Okay, it's at that point. Okay, a lot of these are near the high. Okay, you don't have to be in sexy techs to have a good return, right? If you bought P&G, you done well, but it's time to go. 3M, nice move off the bottom, right? So yeah, if if this thing hold, if it break above the 200 MA and then check back and hold, right now okay, look, it struggle here. Okay, this is not convinced. This is not convincing to me that it's a breakout. Okay, it need to clear the high of this day right here. Okay, because as you can see, seller come in 3 days in a row. So we'll see. there could be a big long play on 3M. Speaking of those things, how about Clorox? I like Clorox more here. Okay, if you want to sell put spread on Clorox, yeah, down here. Okay, gap fill, right? Yeah, down here, gap fill. But look like there's support coming in at a 200-day moving average, right? If you want to dabble in Clorox, I would not hate it, right? But to me, the big move is still maybe a couple of weeks, if not 2 or 3 months out, because it need to keep riding. It might ride the 200-day moving average for the next couple of weeks, for the 50, for the 20 to come down, right? They will come down, and eventually it will be, the longer it goes sideways and drift, grinding upward, I think the better chance that you have a violent move upward, right? So I like it. I'm putting it on watch here. Okay, I'm watching it on a daily basis now because I think there could be a breakout in Clorox. Yes, I'm saying that a breakout in Clorox. All right, so there's a lot to like about Clorox here. As boring as that is, yes, there is. Okay, if you want to draw a trend line like that, you can, and yeah, I like it. Okay, I like it. Give me another week or two going this way. Stay around 153 to 154. Give me a week of that. I might start to accumulate Clorox. At the least, sell put spread maybe 145, 140 below. All right, let's jump into drug. Bristol Myers. Yeah, it's in that area where if you want to buy the dip, yes, give it 3 days, right? The 3 days down, yeah, I think so. Depending on what it's doing Monday or Tuesday, right? It could be a spot that Bristol Myers is down big, pretty big. Okay, let's go back 3 years. Okay, this is an area of support here. Okay, I drew in this line. It's a multi-year. Let's go back even 10 years. Okay, it's an area of support as well as resistance. Yeah, we're in that zone. Okay, as often as I mention support and resistance, I also talk about a zone. It's never, rarely, it's just one line. Okay, it's a zone, and it's into that zone of support. So I think if you want exposure to Bristol Myers, here is a spot that you can start to build a position. J&J. Let's see, let's go back to the 1 year. J&J, it's time to go, right? Congratulations if you bought it, but it's time to go. In my opinion, it's time to go. BIIB, Biogen. I've been watching it, waiting for it, and this looked dangerous. Okay, depend on what it's gonna do Monday or Tuesday or this week. I don't know. This looked like it could be a breakdown. If this failed, okay, if this doesn't hold this week, then we have a whole lot of room below, a whole lot. Okay, so yeah, I have not been in Biogen since this pop. I've been waiting for the gap fill. Hey, but if you bought it, right, there were plenty of chances to get out and make money. Plenty. There is no excuse to not take some profit up here, especially after it got here and reversed and got back up there. You should have sold some, if not a whole lot. And of course, now it's sliced through all the moving average, so watch out. The other one that I also watch, of course, is Gilead. Same thing here. Okay, we get the big gap up. Nice move. Congratulations if you have some. But it's been going lower high, lower low, right? It's been drifting down. And if it give, I have an alert here. If this give, hello gap fill. Okay, I'm waiting to sell 70, 65 put spread. waiting patiently for the past 9 months. Okay, so yeah, Eli Lilly, any move back up into the 469, 468, I'm selling. Okay, trimming, I will be trimming. I bought down here, I will trim. I missed this trim right here. I had order in, but it was just a tad. I had order in to put it right at the high, and it just missed it. But the play is trim up there. Buy back on the 50, right? Easy peasy. Pfizer, still ugly, okay? Still ugly. Keep grinding sideways, okay? There's no reason to do anything here with Pfizer as far as buying in, adding in. No reason to. Just leave it be. Leave it be. JSK, I trim a little bit up here on this week. I'm not sure what the reason was. Earning was decent. Okay, earning. There was a delay reaction because of the time zone. It's weird. Glaxo, because it's a European company, British. It announced earning the night before, whatever. Okay, it have a mute reaction on that day, but then it have a crazy reaction, and then yeah. What would I do? Nothing. Would I buy back? Would I trim at the gap fill? Maybe. For sure, down here. Okay? To me, buying on a 200-day moving average has been a better, safer play because it has, okay, it has violated the 200 enough time. But yeah, kind of boring. Amgen, wow, right? I'm out. Okay, it's at an area where I think, look, this does not look. Volume has been light, and all this little wick, plus you get earning coming up. I don't want to be in it. Okay, I don't want the rug pull. Okay, I wait for the after earning to decide what to do. For now, I'm out. I sold everything. I'm out. FV, if you're in it, congratulations. Wow, what, this was ugly. Okay, this move was ugly. This move was ugly. That hurt me. Thankfully, I was able to recoup that loss when it was going sideways here with put spread, yes. And then I got out. I exited FV on this move here. Okay, but it still go higher. But I think it's time to go. Does it have enough juice to get to 154 up there, 155? Yeah, maybe, but yeah, I'm not in it. I'm not convinced. Okay, I'm not convinced that it can get up there. Have I touched all the drugs? Oh, I can't even pronounce this one. Alnilam. Okay, I've been nibbling, right? I think my average is like 192-ish. Would I sell if I see 205? Yeah, I'm gonna put an alert right now. Trim. Oh yeah. 205. Okay. I set my alert. I have an order in already to sell, but at least the alert will let me know that it's time to watch it closely. Okay. My sell order is, of course, up here, 206. Okay. Just below the 200-day moving average. I have some. I have sell order at 206, 207, 210. Okay, I have a whole bunch. So on any big wick up, I will exit. But I'm glad I bought. The lowest I bought was 191 something, just below 192. So it's all right. ARGX, the other one, right? And this was insane. Okay, this move here was insane. You don't usually you do not see a gap like this and then a strong move 5 days in a row that almost double up the gap. The gap was from 380-ish to 480-ish, right? So you're talking $100. And then it went up another 80, 70. Yeah, almost a double, all right? So that's insane. You know, and now it has given back. Yeah, there's no reason to be. I think if you're in it, you in. You could be looking at another $50 downside move. Okay, so be careful. If you're still in it, I'm not sure why. You should be out. The biotech are crazy. Okay, it's volatile. All right. The disaster du jour last week that I bought in was Honeywell. Why? Because of this long-term trend line. Okay. It's also a channel. If you want to use that line up there, it's a channel. But for me, earning was not bad. Okay. The revision on earning and guidance revenue is not bad. So it's kind of silly, but it is what it is. I bought, of course, the lowest I bought was, of course, 197.5, right? On this move, I bought. Would I buy Monday? Let's see what happened Monday. Okay, if there's a bounce, I might add a little bit. It's a small position. I have 50 shares, so it's not huge, but I would like to build a much bigger position. Okay, this is kind of position where I would love to own twice as much, if not 3 times as much. And I think, would I keep adding down here? Depend. All right, if it give me a 2 green candle, okay, give me a sign that this stabilized and this is it, and I think the bottom is in. Regardless, I did sell put spread for this Friday, where 192.5, way down here. Okay, I saw put spread way down here. Is it low enough? We'll find out. But the big loser, of course, was my 197.5 spread, because that was crazy. Okay, that was crazy. But it is what it is. Can't win them all. But I like Honeywell here. Have some exposure to industrial is not a bad thing. Okay, not a bad thing. If you can buy, if you can stomach buying here at 195, 197, you can have a 10, 15% move by next earning, in my opinion. Let's see. The insurance, the health insurance, big move. But for those that follow me last week, right, I said it's done, right? It was time to go. And I do believe the path of least resistance for the ELV and the UNH is lower. So right now I don't have anything. I did do some bear put spread as well as some naked put on UNH and make some money there. Same thing, okay? Yeah, the path of least resistance is lower. Speaking of health insurance, of course, then you take a look at Humana, which I am the least bearish on because of where it has not made any kind of move, but because earning is this week. Okay, so watch out. I had put spread way below, even below the 50-week low, just in case. Okay, just in case. But if there is any kind of wick down, I might even buy the share down here in the 4, down here, 430. Yeah. If there's a earning come out and it's decent number and the stock sell off anyway, that's the kind of time where you want to buy. Okay. If they guide higher and the stock go lower, take a position, especially in Humana. Of course, Cigna, yeah, that move was a great bounce. Okay, great bounce, but now path of least resistance is down, so avoid. Now defensive stock, Lockheed Martin. I've been selling put on this seemed like forever. Yeah, where I sold 440, 435. Okay, that has, I mean, I have sold as high as 445, 440 spread, sometimes even 450, 445 spread. But lately, the past week, it's been lower. Okay, lower, and that's okay. Earning nasty day still is not convincing that it has found the bottom, but I think it's near if you want to buy share outright, and I might do that. I have a very small amount of share that I would love to add to it because I play mostly put spread. Now the other disaster du jour was of course RTX. Um, it's important to break this right here. Okay, it's not as bearish as Honeywell. Okay, but to me, um, it need to break this. Okay, 4 days in a row now that it is at this level, because obviously there are people that are happy to sell and get out in that 87 range. They may have bought it here before this gap down, and they don't care to wait, but at the same time they also don't care to sell down here. Okay, so that's why it's been stuck here in this ceiling right here. But if it can break it, then I think you can see a slow grind drift. The big move here is going to be on them come out with some kind of definitive number projection on the cost of repairing and replacing that engine that caused this. Regardless, they guided higher going forward, so this was dumb, but at the same time I understand why it struggled right here. So yes, I like this. I've been playing strictly put spread, no share, but I would like to add to some share there. Okay, the other disaster of the week was of course Spotify. It came down, it's hugging the 100-day moving average, hugging. I sold put spread. I have a whole bunch, and I sold just one for this Friday. It was 136, 133. That still might not be low enough. I just do one just in case there are another leg down. Okay, I don't know if this give, and what I would do is set an alert right here. Close spread. If this break, I'm going to close my spread down here, even if it's a small loss, because I do think if this break, it could be a nasty second leg down to the 200-day moving average. Okay, this stock has ran a lot, okay, a lot. So can it come down? Yeah, I have this zone of support here, so yeah, I would rather close out my spread for either small loss or small gain, and then go heavier down here in the 115, 110 spread. Okay, so that's the plan. Okay, let's move on to the FANG. Microsoft. If you bought the dip, then look to sell the rip. Okay, I bought the dip. Long term, it's a no-brainer to have some exposure to Microsoft, right? But yeah, earning was kind of meh. For now, I'm not adding anymore. I sold a lot of put spread last week, a lot. Okay. Would I sell put spread on weakness? The answer is yes. Where? Of course, down here, right? Do if you want to play it close, 310, 305, yeah. Same thing with Meta, okay? If you trim Meta, if you buy Meta, if I trim Meta, bought Meta on the dip to the 20 MA, trim again on this move, resistant, okay? It's key resistant here. I think the path of least resistance is for Meta to drift back down to 300-ish, okay? Yeah, it ran hard for a long time. Google, better news, it popped. I do think it's place to trim. All the good news baked in for now. Yeah, congratulations. But I think it is more likely to drift down. Where would I sell put spread? I would sell put spread 125, 120. That's the area that I think, because you have this resistance up here. Okay, so that's, to me, forget the gap fill for now. To me, this area here, 127-ish, 126-ish, is going to be an area that could be a support, where because it was resistant before. So if I was going to play the put spread game here, I do 125, 120. That's the area you want to sell put spread, because guess what? The 50 is coming up. Okay, you're gonna have the 50 coming up. It's gonna be roughly around 125 by next week. Okay, so yeah, 125, 120 put spread looking good. Tesla, where would I sell put spread here? Gap fill. Okay, to me, if you want to play it safe, gap fill. Okay, I would sell 230, 225. That would be the highest that I would sell Tesla put spread. Otherwise, way down here, I would do 220, 215. That is even safer if you can get at least a dime or more, right? Way down there, because yeah, on earning, it's been sliding down, and no need. Would I buy Tesla share outright? Maybe. I do have a few shares, not a lot. I have literally 5 shares, not a whole lot. Okay, I bought down here. My average is like around 260-ish. Would I put a stop on it? Maybe I would put my stop, say 255. Okay, and then buy it back down here at 50 MA, right? That would be the play for Tesla. Earnings coming up for many things, but Ulta is another one that have rebound nicely after last earning. Okay, we still got another couple weeks until earnings, so to me it's safer to sell put spread, say 425, 420 down here, fill the gap. Yeah, but yeah, if you bought or trade Ulta on the bottom here and you didn't get out up here, yeah, it filled the gap, right? It's time to go, right? You gotta be smart. You gotta be disciplined. See the gap. I'm gonna draw it in. Gap fill is often time to sell or time to buy, right? Depend on if it's a gap below or gap above. If it's a gap above, yeah, you had 2 days to exit. If you didn't, you hate yourself, because you gave up literally 10%. Yeah. How can you be happy not selling at 485 and now staring at 445? $40. That's just ugly. Okay, so be disciplined. But I think buying share outright, 427-ish is okay. I would rather sell put spread, because when earning coming out and they have not solved the shrinkage problem, we have a problem. Okay, targets. I would not chase here. This is not the time to chase target, okay? I have been selling put spread for seem like forever. Even 2 or 3 last week that expired worthless. So yes, keep putting little money in my pocket. But this does not spell convincing, okay? It's not like a breakout. And earning coming up, if they come out with another earning with not solving their shrinkage problem, say hello to 125 again, okay? So just be careful. Be extra careful there, right? Walmart, I'm not touching, okay? Not touching. Costco, if you have it, congratulations. Wow, okay? Wow, okay? That's all I can say is wow. Would I touch it here? Heck no. Heck no, okay? But if you have it, raise your stop. What else? What other sector is it that I have not touched? Okay, banks, of course, banks. Bank of America, not a surprise, not a surprise that it struggled here, okay? I talk about that, this key, okay? So not a surprise. It need to break it cleanly and retest, check back, all of that. It need to do that, okay? So I'm not surprised that it's struggle here, but I think a bigger move is ahead. Just give it time. Give it time. KRE, what a move. What a move. Where would I sell the rest of my KRE? I might trim some more into the 52-ish area, right? But nice. If you're in it, if you got in, congratulations. If you trim, nothing wrong with that. If you're holding still, then pick a winning. But I sold naked put last week, so I keep on collecting money at the 45 range. And yeah, I do think though it had run a lot. Okay, so if you haven't sold anything, at the least sell some in the 52 area, trim some. Okay, look, the 2-day moving average, right? Don't be stubborn. That's all I gotta say. Goldman Sachs, it's time to go. I have nothing there. I have nothing. Okay, nothing. The time to buy Goldman Sachs was down here, which I saw put spread forever. Going back to last earning, right? So that was easy to make money here. But now it's time to go if you have the share. Goldman Sachs. Let's see, what else would I want to talk about? What did I buy? Oh, let's do Starbucks. I sold cover calls on Starbucks as high as 104 last week. That was crazy. On this move here, of course, I sold 104. But earning is coming up soon, so be careful. I'm doing nothing right here. Okay, I'm not adding. I think China number is going to be very strong. I do think the path of least resistance for Starbucks is higher. I'm not trimming anything yet, but if it break over 105, yeah, I will start trimming. Okay, yeah, I do think number on Starbucks is going to be very good, but I'm not adding to it. Okay, I have something like 175 shares, which is more than enough. Okay, more than enough exposure there. Now the other coffee related but less so is Bros. Dutch Bros. I talk about this. I start to build a position, small position. I sold 2 naked puts last week, and I thought for sure I will get a sign. Okay, it was 30. The puts was 30 and 29. I sold the 30 first, and then when on Thursday, when it was so ugly, I sold a 29 put naked. both of them naked because I would be more than happy to add 200 shares on an average cost of 29.2 or 3, something like that. Yeah, but nope, that didn't happen. Now on any move down, it's a very volatile stock. Okay, it's a small cap, very volatile. I will add shares below 30. So what I would do is, put in order to nibble shares below 30 all the way down to the 20 MA. And if I see, in fact, I'm going to set an alert right here. Create an alert. So spread below and nibble shares. Yeah. I will have order in below 30 as well. But yeah, I like it. I like the risk reward here for the breakout. And that's it. I think that cover. Let's do a few more. DGX. I nibble. Okay, I sold, trim on this move, and of course I nibble, and I will keep nibbling. I have not buy back everything that I trim on this move. Okay, so I have plenty of room. I bought back maybe 1/5, 1/4 of what I sold, so I have more room to buy into 132. Okay, I have orders in to buy more share between 132.5 and 129.5. All right, I would buy them all back in that zone. Okay, I like it. Oh, Met device. How did I skip the Met device? I did trim ABT again. I'm down to 25% of my position. Okay, I start to trim, and then I didn't like the action here. Okay, so I trim and raise my stop. Yeah, it's like I said, right now it's kind of in an area where I think earning is done. There's no catalyst unless there's money flow from other sectors back into med device. I just don't see it move higher. Okay, the disaster du jour, of course, was EW. Earning was decent. It wasn't ugly. Yeah, it didn't guide down, but it is what it is. Okay. The good news on EW is, well, let's start the bad news. The bad news is it's so messy. This chart is so busy. Okay, so busy. First of all, let's take this out. Well, let's leave it in for now, but let's add something more useful here. Let's do this. Add a drawing. Okay. Support. This thing is lining up near perfect with the 200-day moving average. Would I add down here? The answer is yes. So okay, so the bad news is it still potentially have downside move. I thought for sure it would stop here in the 86 range. No, it did not. So next level, we always go from level to level. Now the good news is we still have lower, not higher low, and higher high, right? So yes, it's bouncing up. Okay, so the good news is it's still, I would prefer it to not go lower, so that we can say that lower high is still in play, right? So you want lower high, higher, lower, higher low. I can never say that right. We want to keep the higher low, higher high trend coming. So it need to stop here and bounce. Okay, so we'll see how it's going to do. Now Medtronic, I think earning is coming up. Once again, it's danger zone. Okay, danger zone. It need to clear. It need to break this. I have an alert here to trim. I have my order is in to trim, right? So yeah, I got enough exposure there. Now I have been selling put spread on ISRG, but I don't have anything going into this week. Last week I did, okay, and I think it's danger. Then we're in danger zone mode, okay, because there's a gap fill down here. Okay, there's a gap fill right here. Let me draw it. Draw that in so that we can see it. Effect set on alert. Below. Gap fill. Okay. That's where I would sell the spread, but that's getting a little iffy. I was doing that. I was doing 315, 310 last week. And make no mistake, I was nervous because if this break, it can come down there. So I would rather sell down here, okay? Do a 295, 290 if there's any kind of juice. Because it wouldn't take much for this to give and test the gap fill. All right, so I don't want to sweat it. So at the least, I say doing 300, 295. That might be possible if the juice is not enough for the spread below. But that's it, people. Enough yapping. Let's cover everything as always. If you want anything specific, leave it in the comments below because I don't read minds, okay? I don't. I can only follow so many stocks.